Time now for an in-depth look at the market news this afternoon, and for that I'm joined on the line by Mr. Daniel Yu, Global Strategist at Yuanta Securities. Mr. Yu, good afternoon. Thanks for coming on the program today.
Good afternoon.
Well, with the apparent slowdown in consumer inflation in the U.S. last month, we now see producer prices actually going down for the first time in 2 years. Stocks on Wall Street closed mixed, the S&P and the Dow moving only slightly, the Nasdaq off a little over 0.5%. What's the story in the global markets?
Yes, as you said, U.S. market were pretty much flat. Dow was up by 0.08%, while the S&P 500 was down by 0.07%. And also Nasdaq was down a bit more, declining by 0.58%. Pretty much yesterday was kind of subdued because of the uncertainty regarding the oil prices and the inflationary pressure. But if you look at the CPI number coming through 2 days ago, and also the PPI number coming through yesterday, all seems to indicate that we already saw the peaking of inflationary pressure. And therefore, most likely that inflation is going to be gradually going down. Fed has not been really saying that they will be slowing down in terms of the raising interest rate, in terms of the speed of that. They've been doing giant step in the last 2 meetings by 0.75%. A lot of people are uncertain about how aggressive they will be raising interest rate in September 22nd. But it seems that the possibility of hiking by 50 basis points is higher, at around 65%, and hiking by 75 basis points, the chance is to be about 35%. So overall, most likely that the speed of the raising interest rate will be slowing down going forward, particularly going into November and December when Fed meets. We think that they will be lowering the speed to 0.25% territories. If such, then by the end of this year, the Fed interest rate will be reaching 3.25 to 3.5%. That is most likely the target that Fed is probably expecting. If so, then we think that U.S. market will be in good position to do further run in a bit more of a longer term basis. We think that the S&P 500 can be rising to at least 4,300 to 4,400 by the end of this year. Maybe next year it will add another 10% on top of that. But in any case, for the time being, people are still uncertain about the speed of the Fed raising interest rate. And if they don't really lower the speed, then market might be doing another correction. So we'll wait and see what happens in September 22nd.
Well, Korean stocks started out the session today a fair bit lower, but pared those losses by the end of the session. The KOSPI holding above 2,500 points. Carmakers with a gain today. Tell us about the domestic market.
Yes, KOSPI ended with quite a bit of a recovery. At the beginning of the market, it did go down by close to 1%, but it recovered to KOSPI rising by 0.15%. Nasdaq was pretty much flat at 0.06% decline. If we look at the overall trend-wise, the foreign investors are buyer of the Nasdaq, but it is the institutional investors that have resulted into quite significant net buying, allowing the market to recover. We think that the Korea's valuation seems to be quite cheap still at the current point in time, and therefore we think that the foreign investors' interest will continue. And also, if you look at the currency-wise, the U.S. dollar is depreciating and affecting Korean won to appreciate. It's still at 1,300 level, but we think that it has room to further appreciate by somewhere between 3 to 5% over the next 3 to 6 months. If so, then foreign investors' net buying should continue, and overall fundamentals of the Korean company seems to be reasonably okay. Of course, people are quite uncertain yet whether or not the economic recession for U.S. might be happening anytime soon. But as far as the labor market's concerned, as far as the overall consumer consumption level, U.S. seems to be quite resilient. Also, China seems to be quite resilient. Therefore, Korea is not going to be suffering that much in terms of the economic recession in the future.
Well, now to switch gears here for a minute, the cryptocurrency market has rebounded the past couple of weeks. The coin Etherium in particular is up around 80% over the last month. These moves are even bigger in the so-called altcoins, but Bitcoin itself is up around 25%. It seems it's basically doing what the stock market's doing, but more so. What do you see happening in the crypto space?
Yes, it's all about what's happening to liquidity condition. If you look at the overall deposit growth rate of U.S., it were going down quite significantly from the 25% year-on-year growth rate at the beginning of year, now down to about 5% or so. It did go down to as low as 4.5%. But it seems to be stabilizing and rising by about 5%. So what we have seen is that quite significant slowdown of the money supply growth rate, M1, M2 growth rate, but now it seems to be stabilizing. And the number itself is still rising trend, and therefore, given the fact that cryptocurrency has declined in terms of its value quite significantly, so therefore, it is probably in a good room to recover. We need to look at all three alternative assets, including the gold and silver and cryptocurrency side. Adding all that up, we have seen quite a significant correction of the overall total asset size, and that's the reason why it has shown a quite significant decline. But given the fact that overall money supply growth rate is not going to negative territories, but it is growing at 5% territories, if we calculate the numbers, then cryptocurrency should be in a good position to do further rise, given the fact that liquidity condition is reasonably okay. Also, we need to look at what happens to the overall asset size of the Fed. If they continue to reduce the asset size, the balance sheet, then it will act as negative to the overall cryptocurrency market capitalization. But we think that the slowing down is going to be quite reasonable pace, as the government, the Fed, have said. So therefore, if we assume the money supply growth rate at 5%, we think that overall alternative assets should be rising by 5% annual basis. So therefore, we probably think that it is okay to be investing some value to the cryptocurrencies. However, we need to lower the expectation. We're not going to see value going up by 100, 200%, but rather on an annualized basis, once it recovers, pace of 5% per annum should be a reasonable pace.
All right, we'll keep an eye on that with your help, Mr. Yu. Thank you, as always, for making time for the program today, and have a great weekend.
Thank you. You too.